from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Taylor Riggs in New York, and for Emily Chang, this is Bloomberg Technology. Coming up in the next hour, a warning from President Biden to China's Xi Jinping. There will be, quote, consequences if China supports Russia in its invasion of Ukraine. What this call between the two leaders could mean for this ongoing war. Plus, what more needs to be done to reach true pay equality. We'll speak with a woman who has made it her goal to change the structural roadblocks at her company and what others can learn from it. And he's helping raise millions for families in Ukraine with as little as $1,000 per donation. We'll meet the man behind the 1K project, including what inspired him to get involved. We'll get to all of that in a moment, but first we take a look at the markets. And Ritika Gupta, I know that you were here with us with more, and I think what is fascinating is the weekly gains, some of the best weeks that we've had since November 2020.
Indeed, Taylor. So we end the session higher today on U.S. stocks, actually bringing us to a four-day rally on the S&P 500. Let's take the weekly change, because like you mentioned, even more spectacular here. You actually look at the NASDAQ 100, you're looking at tech making a comeback here on the week. If you think U.S. tech has had a good week, well, take a look at Chinese tech names listed over here in the U.S. in the form of that NASDAQ Golden Dragon Index, up a whopping 26%, Taylor. And all this coming really as we see yields rising. If you look at that 10-year, we end the week at 2.14% here, and we see even bigger moves when we look at the short end of the front end of the curve, and we know that those high yields don't often bode so well for tech stocks. I want to just stick in with this theme, though. Take a look at my terminal chart. I'm looking at some of the big cap tech names. So your New York FANG index here relative to the S&P 500 equal weighted index. And what you're seeing now is that we're actually bouncing off the lows that we've seen this year. There's a lot of questions around this now, like, is this just a blip in what has been a very volatile year so far for the tech sector, especially as we get those rising interest rates? Or is this something maybe, just maybe, perhaps, Taylor, that inflation, the worst cases of inflation and the worst geopolitical scenarios are perhaps being priced in? Maybe the market is more sanguine about the Fed. So a lot to weigh up here. I think it's going to be very interesting to take a look at the tech sector, how it trades in the coming weeks. Finally, just taking a look at some of your top movers on the day. I start off with NVIDIA, that chip maker, having a good day, actually extending the rallies that we've seen this week. I'm also looking at DocuSign, up some 9% in today's session. The CEO selling $5 million worth of shares. And then also taking a look at GameStop. I wanted to give you a loser here, Taylor, but actually it erased the losses that were up losses of much as 10% or so. It seems that those earnings missed those sales just couldn't make up for what's higher cost. We know they're bringing that NFT to sale very soon, Taylor.
I thought the NFT would have saved the day, Ritika. Not to mention the short squeeze. Thank you, as always, there, our very own Ritika Gupta. Happy weekend. Now, of course, today, President Biden spent roughly about 2 hours in a video chat with Chinese leader Xi Jinping. The two talked about Russia's invasion of Ukraine and what to do next. For more, I'm joined by our Bloomberg political director, Jody Schneider, in Washington. It was interesting, Jody, because we were speaking with Anne-Marie Horder a few hours ago. We heard China's version of events, then we finally got the readout of the U.S. version. What did it sound like for you for how the call went?
Yeah, so they're very different versions, Taylor, as you might note. They agreed on that they talked for 2 hours. There was a video conference. First time that the two leaders have spoken since November, so obviously the first time since the Russia's invasion of Ukraine. The Chinese summary came out first, shortly after the call, and in it they said that President Xi Jinping made the case that they did not want to see an invasion of Ukraine and that they do not think that countries' conflicts should be settled on the battlefield. However, they didn't mention Russia by name and didn't publicly and have not publicly criticized Russia for or denounced Russia, as most of the rest of the world has, for that invasion. On the U.S. side, we got that statement later, several hours later, and basically they said that U.S. President Joe Biden had had come out very strongly and said that there will be implications and consequences for China if they were to take direct support of Russia, such as selling aircraft or military equipment to them for that invasion, and also made the case that President Biden made the case that the U.S. had taken a number of steps, including sanctions, to try to stop that invasion in the first place.
Jody, how do you think about the significance of these talks, given the heightened sort of geopolitical risk that we're already in? Because let's be honest, coming into this was a U.S. and a China relationship that was already pretty strained.
That's right. These ties have been frayed in recent years by a number of things: the trade tensions, tensions over things like intellectual property disputes, Hong Kong, Taiwan, and then this on top of it. But the fact that they're talking, I think, is significant in and of itself. We have nuclear powers here discussing the invasion of a country by another nuclear power, and the fact that they are talking and that neither side, that both sides seem to be willing to come back to the table. That was another headline out of this, that they say they will keep talking, is significant in itself. They didn't talk about trade or any of these other issues, though Taiwan did come up, with the U.S. saying it continues with its support of Taiwan, the status quo, which is that it supports the democratically elected leadership of Taiwan. And China did have a fairly strong statement on Taiwan itself, saying that their their perceived actions on Taiwan have been misread and misjudged by the U.S., and there was an implicit warning there.
Jody, I think what's interesting, we're just coming off of a great conversation we had on Triple Take for the last 30 minutes when we talk about the effectiveness of sanctions. And on one hand, they can work when they're targeted, but on the other hand, it really can continue to isolate a country like Russia and push them further into China's hands, right? How are you thinking about globalization, the reorder of the world as we're thinking about sort of these bilateral relationships, or if it's really just more the Eastern powers versus now some of the Western countries?
Yeah, it certainly has the potential to shake things up and to deliver us to more of that Cold War world. The other question with sanctions, Taylor, I think is interesting, is how much further can they go? The U.S. has, this has been the their big arsenal, if you will, in trying to first prevent that invasion, and then when they couldn't prevent it, to punish Russia for it and to try to isolate them. But they have gone, there doesn't seem to be much more they can do in terms of sanctions. And that's a real question. What comes next?
We will stay tuned on what comes next, and I know that we'll stay tuned with you. Jody Schneider, thank you so much for your time, our political news director. Let's stick with the impact of the war in Ukraine. I want to bring in Dan Ives of Wedbush for his read on it. Dan, I've been reading all your notes in the past 3 weeks. It's cybersecurity, cybersecurity, cybersecurity. What do you think are going to be within cybersecurity some of the biggest, I hate to use the word beneficiary because we're talking about a war, but how do you sort of see this playing out within your world of equity markets?
Yeah, and we've seen that. I mean, there's clear elevation of threats. We think upwards of 25% in terms of the elevation of threats since what we believe is a cyber warfare that's already underway from Russia. You look at names like Palo Alto, Zscaler, CrowdStrike, Palantir, and Tenable, and CyberArk. Those are really the basket of names among many others that benefit. And that's why we believe cybersecurity spending is going to be up 4 to 5x overall IT spend. I think it's going to be a golden age for cyber. And right now, we're really seeing the importance as they protect enterprises as well as many organizations and agencies within the Beltway.
But does that tech spend come from somewhere else? Because tech spend was supposed to be strong coming into this year, if I remember correctly. But with the Fed raising rates, we might be looking at a little bit of a slowing economy. If a company now has to choose where they spend that tech, is it clearly going to be cybersecurity? Does it come at the expense of something else?
Yeah, it's a great question. I think that's where it's really cloud and cybersecurity are the priorities. I mean, we're seeing cloud budgets in many ways up 35, 40% across the board. And cybersecurity goes hand in hand. So, and I think where that's coming from in terms of maybe a negative, some of the hardware, some of the networking purchases, that could be negative for the likes of Cisco and others. But I think what we're really seeing here is a bifurcation of tech. The work from home, the e-commerce names, I think a lot of them are catching a falling knife. You look at where the spending is, enterprise software, chips, some of the stalwarts, Apple, Microsoft. In our opinion, this week with the Fed, the tech bottom we believe is in once they rip that Band-Aid off this week.
Okay, let's talk about that, because the macro picture, Dan, is a Federal Reserve that's raising rates, but you're coming off of a tech sector that just posted one of the best weeks that we've had since November 2020. The headwinds, though, of raising rates, the pressure that's putting on valuations. Why are we at a bottom?
Because I believe tech stocks are the most oversold we've seen in the last 5 to 6 years relative to growth. And I think what's happened is the risk off trade, everyone's headed for the elevators at the same time. Uncertainty, obviously a horrific situation, Ukraine, the overall geopolitical. But now the Fed, Powell, they've laid it out. So now the bulls and bears could, debate it, but now there's less uncertainty. And combined with what we saw in valuations, the compression, and the growth, and then you look forward, I believe especially in software, chips, some of the stalwart plays, Microsoft, Google, Apple, among others, in our opinion, it's a bright green light to own tech. And I think that's what you're starting to see. Risk on, I could tell you 4 or 5 to 1 investors calling us, looking for buys versus shorts.
Interesting. Dan, I want to talk about some other headwinds on the way. It's so interesting. I think we're all trying to become nickel experts in the last few weeks. The impact that it's having on electric vehicles, as we're thinking not only about oil shortages and cutting off supply from Russia, but then the nickel imports as well, and the big ramifications it's had in the markets. How do you think about EVs, batteries, the push forward on that initiative if we're struggling to get our hands on maybe some of those raw materials?
Well, I think it's bringing up the issue front and center, because now price increases. And you saw Tesla put a price increase this week, and you saw Xpeng and others, because of the average EV is going to increase to about anywhere between $1,000 to $1,200 given this. I think it also just speaks to what we see in terms of raw materials. You're going to see for other sources of raw materials, some could say maybe underwater and some other maritime areas start to get front and center. But when you look at EVs overall, I still view this as not really denting overall demand, because I think overall, when you look at gas and you look at what happened in terms of what we see in Europe and across the US, I believe it pulls forward EV demand potentially by 2 to 3 years, given what we've seen with a lot of fence-sitting customers. Price increases there on nickel, but overall the demand continues to be just massively pent up. I think a lot of these stocks way oversold, Tesla front and center.
Except what about, it wasn't Tesla, but another EV maker who tried to do price increases and then got some backlash and had to roll it back. Are you worried about a consumer who maybe with broader inflation is feeling pinched and says, no, I'm not going to accept that price increase? How do you then think about the impact on margins?
Yeah, and when you talk about Rivian, the price increase, and then the mea culpa, I mean, that was a disaster Friday the 13th episode, which continues to be an overhang and a head scratcher in terms of what they did. But when you look at Tesla, I compare those price increases much more modest to the likes of Netflix raising prices and what you saw in Amazon in terms of Prime. The stalwarts know that they can increase prices and minimal demand impact. So I think you can't paint across the board with the same brush. But I think Tesla, in terms of price increases, we could still see the 2 to 3K of price increases. And right now, demand's outstripping supply today by about 35%.
Dan Ives of Wedbush, really appreciate it.
Thank you.
Love getting you here on this program. Have a great weekend. Coming up, we are going to be sticking with sort of this theme of Ukraine and be talking to the man behind the 1K project. It helps Ukrainian families who've been displaced by the war. We're going to discuss how he's managed to get millions of dollars in the hands of those who need it most. This is Bloomberg. As we watch day after day the horrific images that come out of Ukraine, many have wondered how to help. Mere days after Russia attacked Ukraine, my next guest decided to help families in need by getting money directly to them. He's helped more than 2,000 families so far, all thanks to people donating about $1,000 to sponsor a family. Joining me now is Alex Iskold. He is the founder of the 1K Project. He was also born and raised in Ukraine before fleeing the country during the Cold War. So you, unfortunately, know all of this too familiarly. Talk to me about sort of how you set this up to make sure that the money really was going to those families.
Yeah, absolutely. I mean, the premise of the project is simple. It's families in US and around the world sending 1K directly to families impacted by the war in Ukraine. And this is sort of direct human to human help is the best way to help families at scale.
How do you then make sure, though, that it isn't overtaken by, I don't know, people who were taking money away from it, right? Because you want all of that money really to go to those in need. How can you ensure that people who are donating that money and 100% of it is really going to those families?
Yeah, well, this is a great question. And first off, we're not a nonprofit, so we basically take no fees. We match sponsors who go to 1kproject.org, and it literally takes 10 minutes to sign up. We then have a queue of families that were vetted based on the applications, and our volunteers are literally reading these applications around the clock. And so once you sign up as a sponsor, you basically get matched to the family and you get instructions for how to send money directly to their bank account.
I mean, it's really a wonderful project that you're doing, Alex. I am curious what you're hearing from families on the ground. We've just seen the horrific images after images, what they're telling you about how they're trying to continue to contact you, trying to continue to talk to donors from around the world while they are literally in the middle of a war.
Yeah, and you're absolutely right. I mean, we are able to help families in war zones who lost their homes. We're able to help families who are displaced within Ukraine and also families who are refugees. And consistent thing that we're hearing from them is they need money for absolute basics like food, clothing for children, rent, and increasingly people in Ukraine need money to be able to move out. And so we are absolutely flooded with incredible gratitude and love that also underscores really like strength and resilience of Ukrainian people and just how meaningful this money is. $1,000 helps them, helps families with like 3 to 4 people, primarily, single mothers and people who just are not able to generate income in any other way. And so it's exceptionally meaningful.
Alex, talk to us about that long-term resilience. We've been having a lot of conversations, of course, in the middle of this, the humanitarian toll, but long-term, how you think we just spoke with the economic advisor, right, to the president of Ukraine about how you rebuild the roads, the bridges, the schools, the apartment buildings. Long-term, how are you thinking about helping to sort of being able to rebuild if people can return to Ukraine at some point?
Yeah, and Taylor, honestly, I wish we can stop tomorrow. I certainly wish every day the war stops immediately, but the problem is devastation is so big and the displacement is so large. There's so many refugees. It's going to take months and years to rebuild. And so the project has its meaning and the North Star. Our goal is to help as many families as we possibly can. So to date, we've been able to, we've raised over 2.7 million as of right now and helped over 2,200 families. We have 35,000 applications and we know that there's about 3 million or more refugees. And so we've got a really long way to go. And, every $1,000 counts because, you can make a difference and an impact. And so our mission is to continue through absolutely the end of the war, but more importantly, really be the bridge to help these Ukrainian families to come back home and to rebuild.
Really well said. Alex Iskold, founder of the 1K Project for Ukraine. Really appreciate your time. Thank you. And there's going to be much more ahead on this. We're getting back to the markets as well. This is Bloomberg. It's the return of in-person events. Quick Takes. Madison Mills speaks to the South by Southwest attendees in Austin, Texas, as the conference returns for the first time since the start of the pandemic. Take a listen.
We're here at South by Southwest in Austin, Texas for the first time in 3 years. Now, this conference used to draw over 500,000 people to the Austin area, but in March 2020, it was canceled due to the pandemic. So what's it like to be back? Let's talk to some people and find out.
Huge. South by canceling in 2020 was like a really big moment, I think, both for like the world and my career professionally. I spent 9 months planning an activation to come back, and 3 days before we took off, it all canceled.
You can feel like the excitement in the air. Like people are really excited to be back and ready to be back.
How does it feel to be back after 3 years of no South by?
It actually feels really good. Hey.
How often does this happen where people just take your picture?
I mean, with this on, come on.
So obviously canceled back in 2020. We're back for the first time in 3 years. What's the biggest change that you've noticed?
People are definitely a lot more patient instead of being huddled up against each other. There's just a really good energy here. Everyone's really excited to see what the new exhibitions bring, and just seeing blockchain and NFTs and more crypto coming to like the main front, I think that's probably the coolest thing.
Do you feel like there's much focus on COVID, or are people just kind of ready to block it out?
Nah, this is Texas. I don't think anybody's too worried about it.
It seems like there's a little less people, honestly. It doesn't feel like it's quite as busy as it's been in years past. And I think there's also just like the rules of COVID and staying safe. You know, we have to have the Clear app with us and have masks and trying to navigate where and when it's safe to be masked and unmasked.
Mixed bag. I feel like I'm seeing masks, I'm seeing no masks. I think people are just excited to be back in person, and they're trying to do it as safely as possible. So whatever that looks like to them.
I like that it's almost a smaller scale. It doesn't feel as busy as other South bys.
Definitely a little bit smaller this time around, for sure.
Small crowds are bad for small businesses. Bars and restaurants in Austin used to make half their yearly revenue just from South by Southwest alone. That may be harder with smaller crowds, but those who are here, including me, are ready to dive right in.
A lot of the local bars over on Rainey Street, this is like their lifeblood, these events. So I'm super happy that we can have it and keep them in business.
It seems like business is back, and this is such a huge opportunity, such a huge travel destination, that I think it's going to be really great for everybody.
Quick takes, Madison Mills, who gets all the fun assignments. There are a few other stories, of course, that we continue to watch here at the headquarters. The debut of Apple's latest iPhone changes the way U.S. customers can buy it. It's a move toward cutting wireless carriers out of the process and giving the company more control. Users will no longer have to provide carrier information when they buy the iPhone if their carrier is either AT&T or T-Mobile. They also won't have to pick a network plan during the purchase process. Plus, General Electric, they've slashed CEO Larry Culp's controversial pay package by $10 million a year. It's a surprise move in the response to last year's rebuke by shareholders. Culp's total compensation now went from about $21 million to $11 million. It is a non-binding resolution. About 58% of the shares voting went against the original pay deal. And coming up, we're going to be speaking with Credit Karma's Chief People Officer, Colleen McCreary, about how she has worked to remove bias and variability in how they pay their employees, and of course, what other companies can do to do better. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in New York, in for Emily Chang. And Equal Pay Day, it was this week, and it's an opportunity to shed a new light on what more needs to be done to ensure pay equity between men and women, which is something my next guest has been fighting for at Credit Karma ever since she joined the company back in 2018. Colleen McCreary, Chief People Officer, joins us now. Great to have you. And I first want to start, because you think of Credit Karma and you think of it's within the tech sector. And that's really, I think, from my knowledge, where some of the worst discrepancies have been when it comes to equal pay. What's sort of the backdrop and the numbers behind, not only all sectors, but specifically tech sector as well? And are we any closer to closing that gap?
Well, the unfortunate reality is that what we're still seeing is that women only make up about 82% of what a man makes in almost any job. And I don't necessarily know if tech is any better or any worse, but I think tech is so competitive that it puts a big light on the talent shortage and the fact that they're not, doing a great job of keeping and retaining their women, which obviously will come back down to how people are treated and how they're paid.
What did you do then at Credit Karma as you think about coming in 2018 and some of the changes that you found that really have worked and have stuck?
Yeah, so when I joined in 2018, to put it in perspective of Credit Karma's history, it was a startup for a long time. It was about 700 employees, and they had a massive attrition problem, so almost 40% attrition. and also a recruiting problem. And, the other piece was that their employees and employee surveys didn't believe that their pay was fair. And frankly, when I got there, I didn't understand how the employees were being paid either. And so, it took a bit of a journey to get there. And we moved to this system called role-based pay. And instead of using ranges and instead of using like a performance review once a year and moving somebody's pay, $5,000 a year or $2,000 there, everybody who is in the same job gets paid the exact same thing, regardless of how long they've been there and what gender they are or where they worked before.
Is there backlash to that, though? Sorry, just to jump in. Someone saying, but I've been here for longer and I've committed and I've devoted myself to this company.
I think that's a great question. Actually, what we've seen is the opposite. Our attrition, frankly, even now, is the lowest it's ever been. And the other thing that we saw is that the offers that were accepted and what we, for the most part, employees really embraced the idea that they thought it was the most fair way of being rewarded. And they understood where their pay came from, how we were determining it. And we reviewed it twice a year and made adjustments. And so we saw the exact opposite of what you're explaining.
Interesting. How do you compensate then for experience? I know that we talked some about loyalty to a company, but take that out, someone just has more time and maybe more knowledge in the industry. Do you argue then that, well, they're at a different role with the higher pay and that's sort of how you can sort of equalize that experience gap?
So what we did is actually we built a job framework for all of our functions, and we got very clear on what was expected of each role. And so where somebody interviews and they come in, they're slotted in, if you're a software engineer, maybe you're a software engineer 1 or you're a software engineer 4. And it's based on, a combination of your experience, but your skills for that role. And we posted those so that people were very clear on what the expectations were. And we moved to doing promotions 4 times a year. So people weren't sitting around waiting to be recognized for their work. And providing that level of clarity and the opportunity of knowing when they were going to be reviewed and building out an actual calibration so that everybody who was being considered for promotion at that point in time was being considered against the same framework in each and every team that we had. And then we were able to assess and root out if there were potential for biases and how do we necessarily make sure that all of the managers are looking for the right skills. But providing that transparency and clarity to employees really helped a lot in making people believe and understand that they were being paid equitably for their experience and their contribution.
I think the key word you said is transparency. And I think in the past, maybe companies have said that you don't talk about your pay with other people, and corporations haven't always told other people what their colleague is making. How much of this really does come back down to transparency, maybe on the corporation's side?
Well, first of all, it's illegal for corporations to tell employees that they can't talk to each other about their pay. I actually think employees should talk to each other. I personally don't put somebody's pay up on a corporate intranet site or say, what everybody is making. You can't unsee pay decisions. And I think at the end of the day, frankly, compensation is inherently an unfair thing. It's market driven. It's supply and demand. But I'm not going to out somebody who is not comfortable with somebody else seeing what they're paid. But if they want to share it amongst themselves, I think it's a great skill. And I think it really drives on, it's a check on the, corporation. Are they doing the right thing? Are we living our values and what we've stated? And also then employees can potentially understand amongst themselves, how each role does pay.
A lot of our viewers are investors, and I'm curious, as we think about the rise of ESG, maybe the role that pay equity has to do with sort of trickling down not only to the top, but then to the bottom line. What advice would you give companies of some of the positive changes they can make and any sort of then positive impact it may have on the company and the bottom line?
Well, I think I would, start with that pay program that we put into place. We reduced attrition by 2/3 as soon as we rolled this out. And then, like I said, our acceptance rate went up quite substantially for offers being accepted. So just from a talent perspective of keeping and attracting the right employees, which certainly has an impact on your bottom line. And if I look at Credit Karma in particular, we definitely had a rough 2020 with COVID. We were affected by the pandemic. We were going through an acquisition by Intuit at the time. But since then, we've had record quarters in 2021 and into 2022. So, and I think, a lot of that speaks to the talent that we've been able to attract and to keep in our business.
Really appreciate it. Colleen McCreary, the Credit Karma Chief People Officer. Appreciate your time. Now, let's move on we're going south. Going South by Southwest. Today, we're going to bring you the company which won the Best Content in Gaming Startup Award at this year's pitch contest. ActionFace is the first 3D scanning app that instantly transforms users into 3D action figures, and they can customize and purchase. Bloomberg's Quick Take caught up with CEO Kenny Davis at the event. Take a listen.
What we do is we 3D scan you with the phone in your pocket and then allow you to customize the heroic version of you, kind of like making a video game avatar.
When you're ready, make your action face.
As long as the entertainment industry has existed, there's been this sort of business problem, which is that you can't just make one hero that everyone can identify with. And so the sea change for the entertainment industry is, what if you could make every person the hero? And one of the things that's important to understand about what we're doing is we are making action figures, but we're also creating a digital version of each person that can be used across media. Ultimately, what we're building is that sort of on-ramp into the metaverse. So I worked for Mattel and I worked for Hasbro. Every time a VIP would visit, whether it was the CEO of a big retailer or a celebrity, we would make them a doll or an action figure that looked like them, because everybody loves seeing themselves in some sort of heroic world. So we knew people had understood the concept immediately, and that if we could just scale that business, then we had a hit on our hands. The problem was that just the manual labor and the supply chain issues of the technology at the time couldn't scale. So in 2018, Apple added Face ID hardware to their iPhones, and that's where I saw the opportunity. And I recruited this dream team to bring this to life. We are so honored to be here at South by Southwest. We've just won the pitch competition in the entertainment, content, and gaming category. So the next thing for us to do is we're raising a little bit of money so that we can take this experience and bring it to stadiums and theme parks. Imagine going to a stadium, getting yourself 3D scanned, and then during the TV break, seeing your animation up on the Jumbotron. This is what we want to start bringing to people.
Like I said, she always gets the fun assignments. That was ActionFace CEO Kenny Davis at South by Southwest. And coming up, Bitcoin stuck in a little bit of a trading range here, with the Fed signaling additional tightening and, yes, increasing interest rates. What can help jumpstart the crypto industry once again? Big discussion coming up next. This is Bloomberg. Time now for a crypto report. You think it's the weekend, but crypto doesn't stop trading. Wild weekend ahead, I'm sure. Let's take a look at some of these markets, of course, with our crypto contributor, Sonali Bostic. And Sonali, we've been talking a lot about this program. You've been nice to anchor with us all day in the afternoon, pretty much all week, about some of the rate hikes, all of the geopolitical uncertainty, and yet maybe some resiliency within these crypto markets.
Yes, finally a lift back up in crypto markets after a crypto winter. So we look at that rise back up, back above $41,000. You do see a little bit of a dip, Taylor, going into the weekend. But, this rise back up this year, it's not just helped Bitcoin. It has helped companies related to Bitcoin. So if we take a look at the next screen here, let's look at Bakkt. So a company here that just pretty recently went public last year has started to see that lift in more recent days, recent weeks. Pretty significant rises if you look at the tail end there after riding the way down alongside crypto winter. Let's take a look at more of this now with this adoption curve moving forward. What can give crypto the next leg higher? We have Bakkt CEO Gavin Michael. Gavin, thank you so much for joining us. How do you think about the next couple of weeks and months when it comes to cryptocurrency and the types of companies, countries, people that may adopt it in order to give it that next leg?
Yeah, great to be here. Thanks for having me. When we think about it through the lens of Bakkt, we're really working to connect the digital economy. We're trying to bring innovative crypto experiences to the customers of non-crypto native businesses. We're bringing crypto capabilities to your local and regional banks and credit unions. We're working with brands to enable crypto rewards, changing the way people can enter the asset class through this passive acquisition, through using everyday spend as a way to accumulate a small amount of crypto. We're even enabling gig economy workers to really get paid a portion of their salary in cryptos or be incentive in crypto. So I think when you look at adoption, what we're doing is broadening the base by trying to create these new opportunities for people to enter the asset class.
There's still a lot of frictions, Gavin, when you look at being paid in crypto or paying for products and services in crypto, taxation being among them. What can start to make it easier for money to move through crypto markets rather than through traditional dollars?
So I think the first thing you've got to look at is volume. People and businesses in particular are focused less on the volatility and more on the volume that they're seeing in the overall crypto economy. Our role in this connective tissue, in playing the role of connecting the digital economy, is trying to seek to remove as much friction as possible. We take care of the tax. We make it easy for people when they're selling to be able to complete the necessary tax obligations. We're working to make it easy for businesses to be able to accept crypto. And then we're looking for other ways in which businesses can engage and create these innovative experiences, like rewarding in crypto. And when we think about that, we think about the ability for people to be able to redeem for crypto as well as earn rewards in crypto. So our role is to take the friction out. It's to allow us to embed these experiences in the environments where consumers already are. We want to meet customers where they are, whether that be embedding the ability to buy, sell crypto in your local banking application, or simply attach a crypto reward option to the credit card or debit card that you know and love.
Part of that, meeting the customer where they are, has been renewed conversations around privacy and regulation when it comes to Russia's invasion in Ukraine. Some people would say it's a great way to avoid some of the sanctions. Others would say it's a great way to send money and crypto to the people on the ground who need it most. How do you think about that?
So one of our founding principles is that crypto as an asset class is going to mature much faster in an atmosphere where we prioritize regulation, compliance, and security. We've built those principles into our platform from day one. And, our former parent company, ICE, really engendered that thinking in everything we do. So we've made sure that we have the right infrastructure in place to really build that trust and security. We operate under a trust charter. We have a BIT license from NYDFS. We have money transmitter licenses across the US. And we really are focused on being highly regulatory compliant and secure. And, we look at the opportunity for us to be able to help regulators better understand digital assets, to develop regulation that creates safety and soundness in the financial system. And we want to be able to ensure that we keep that agility in the core of everything we do.
My colleague here, Shaneli Bostic, of course, did speak with Mike Novogratz earlier about cryptocurrencies. Take a listen to what he had to say.
The whole year I thought we'd be a 30,000, 50,000 range in Bitcoin. Risk to the upside, not the downside. But I think, 5 years out, if Bitcoin's not at 500,000, I'm wrong on the adoption cycle, right? We see an adoption cycle that accelerates. Bitcoin grew so much faster last year, crypto grew, than the internet did its best years in the 90s.
I hate to come to you on price, but is the price keeping up with that adoption cycle that he described?
So I think what we can say, Taylor, is mass adoption is definitely here. We're moving through an inflection point. We've seen a steady uptick in those that are buying cryptocurrency, and we've seen that for quite some time. And the volume of transactions is an important measure because for us, as volume increases steadily, it really starts to signal that interest and velocity. We're really focused on driving that next wave of adoption, bringing in the crypto curious, a slightly older demographic potentially, someone who's potentially less tech savvy. And we're looking for new ways to introduce those into the crypto economy. we look at price and obviously we're focused on the volatility, but we're more focused on growing volume overall because we think that's where we reach that sustainability point. But there's no question that mass adoption is here and we're moving through that inflection point.
Really appreciate it. Back CEO Gavin Michael, and of course our very own Bloomberg's Sonali Basak. Appreciate both your time. And then coming up, Apple just launched its first new products of 2022. Our very own Mark Gurman. He breaks down for us what to expect and yes, what is still to come. That's next. This is Bloomberg.
Apple has launched its first new products of 2022, including new iPhone SEs and iPad Airs with 5G and faster chips, green iPhone 13s, the Mac Studio, a new monitor, and of course, the M1 Ultra processor. I think the new SE doesn't really move the needle much, because at this point, I still believe 5G is still a marketing tactic, and the other SE upgrades are not that significant. The new Air is nearly identical to the 11-inch iPad Pro. So if you're in the market for a 10 to 11-inch tablet, I'd probably go with the Air instead of the Pro and save that extra $200 of cash. I really do like the new Alpine Green iPhone 13 Pro color, and I do hope it sticks around for the iPhone 14 this fall. And the Mac Studio really shows us how much Intel was holding Apple back in the Mac chip department. While the new display's $1,600 price point is fairly reasonable within the Apple ecosystem, it's not the world's best deal when you realize that an iMac with a full M1 inside is $100 less. Looking ahead, Apple's new M1 Ultra chip sets the stage for a slew of M2 Macs. That would include an M2 MacBook Air, Mac Mini, 13-inch MacBook Pro, and 24-inch iMac, along with an M2-based Mac Pro with as many as 48 CPU cores. Apple's also working on a new high-end Pro XDR display to attach to that Mac Pro. In the next year, we should also get new high-end MacBook Pros and iMac Pros with M2 Pro and M2 Max chips, along with, eventually, a new Mac Studio with an M2 Ultra. Apple's new chips are clearly outpacing rivals, and they're at the very core of both Apple's present and future, and I'm very much looking forward to seeing how the chip roadmap continues to take shape in the coming years. I'm Mark Gurman. This is Power On.
And don't forget, you can subscribe to Mark's weekly Power On newsletter at Bloomberg.com. There are a few other stories, of course, that we're watching. Take a look at NVIDIA, having one of the best weeks since the start of the pandemic. Shares rallied on Friday, with the chipmaker extending a recent advance as analysts all look ahead to the company's GTC conference and investor events next week. Shares are up about 6% on the day, nearly 20% for the week, putting it on track for its biggest weekly percent gain since March 2020. And we are approaching 1 week since another giant container ship owned by Evergreen. It has been stuck in the Chesapeake Bay near Baltimore. The ship, aptly named Evergreen Forward, has been stuck since Sunday night. In hopes of getting it unstuck, Evergreen Marine has hired the same company it used to free 3 other giant container ships when it ran aground in the Suez Canal last year. And we all remember that. It disrupted global trade for months. That does it for this edition of Bloomberg Technology. Wall Street Week is next with one of my favorite colleagues, David Weston. He'll be joined by Sonali Desai from Franklin Templeton, Joanne Feeney from Advisors Capital, and Rick Reeder, CIO at BlackRock, as well as former Treasury Secretary Larry Summers. Big week from the Federal Reserve. I know they'll touch on it. Plus, re-listen to today's show on the new Bloomberg Technology podcast. It's new. It's great. You can find it on the terminal as well as online at Apple, Spotify, and iHeart. Have a great weekend, everyone. This is Bloomberg.